Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. So, for the month of August, we're going to discuss accounting terms every business owner should know. So, I don't know if it's ever happened to you where you're in a meeting, you're listening to a podcast, or just chatting with someone, and you've been in business for a while, and you're like, I am not sure what that term means, but I don't want to ask. So, we're just going to go over some terms that most people usually say, I wonder what that means. I've never heard of it. So today we're going to talk about working capital. So if you have applied for a loan or gone through the loan process, you may have heard of working capital. That's a common term, particularly if you're a new business. Well, not even a new business, but you're starting off, or you've been in business for maybe like five, a couple years, five or so, and you go apply for a loan, and you say, you know what, I need a loan to actually, renovate a building that I want to lease out. And so, a lot of lenders will actually educate you on actually asking for a little bit more in the loan so you can have some working capital for unexpected expenses. So, definition of working capital. Working capital is basically the cash available to meet business needs. That's all it is. It's just cash that is available. Now, you may ask yourself, well, how do you calculate working capital? Well, what you have to do, you actually have to, I'm going to do my hands, do a spreadsheet. And what you're going to do, you're going to plot out for each month cash coming in. Now, in accounting, we call that inflows. So that's cash coming in, that's the inflows. Then at the bottom of the spreadsheet, you're going to actually list out cash going out. So that's the outflows. The difference between the two is the available cash. So you have the cash coming in minus the cash going out. That's your available cash. I know it seems pretty simple, but it really is. It's that simple. Now, of course, we're going to talk at the end about just getting accounting help just to make sure you're taking everything to an account. So that's how you actually get working capital. Now, you may say to yourself, well, why is that so important? You hear a lot of terms about, oh, I need to focus on revenue, I need to focus on gross profit. But remember, cash is king. Cash keeps his door open. Working capital is important because it allows you to have extra cash for unexpected expenses. Also, too, working capital comes in handy when there's a slow season. So if you take, for instance, a lawn service company, they're slow in the winter. So they need to make sure they have the cash available during the winter time. Also very important because working capital allows you to be proactive, and that's what you want to be proactive. So if something happens, you know how much cash you have on hand, you know where that money's being spent and where it's being earned from. So I recommend this week you actually, for the month of August, you actually plot out for the month of August what is going to come in per week and then what's going to go out. So basically, what are you expecting to come in cash wise? And then what are you actually going to be what's going to be going out, whether that's payroll, bills, legal fees, whatever the case may be, plot that out. Then take the difference between the two and see where you are. This will help you identify some gaps. So that's why it's so important to understand what working capital is. So do that for your homework this month or this week so you can actually monitor that. So you can monitor that balance. So hopefully this information is helpful. Make sure you tune in for the rest of the month regarding other accounting terms that you should know as a business owner. I'll see you next time. Bye bye.